Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, today is a day of mid caps and really second day running that you've seen that. So big moves happening right now as far as individual stocks are concerned. Ashwini and Mitesh with us for BTST calls. Ashwini, today we're talking about a very different kind of dichotomy where the mid cap and the junior are actually surging. Your thoughts now on how to approach trade from here and your BTST calls?
See, my sense is that I'm not too sure about the breakout on Nifty or Bank Nifty. Yes, mid caps can do another couple of days of 700 points each on Nifty Junior because that was a forced correction probably, and the market is coming back equally strongly. So this should be looked at as a mid cap rally more than the Nifty or the Bank Nifty rally, because basically Nifty, Bank Nifty are moving fairly slowly given they are at all-time highs, and once mid-cap correction on the upside is over, we'll have to see whether 11,100 gets sustained. So having said that, you have to pick up stocks which are most bashed up, and so that you get biggest bang for your buck. GSFC is a buy with a stop of 106, target of 118. SRF is a buy with a stop of 1600, target of 1665, and Tech Mahindra is Arvind is a buy with a stop of 420, target of 438.
Okay, going with three buys. Mitesh, what are your calls looking like?
Yeah, so I in fact have a BTST and Ujjivan with a stop at 386 for targets of 400, and Arvind was also on my list as a BTST call at about 422. It's now 430.31. So I had a target of around 433. So for the timing, we can avoid that, but Ujjivan looks good for a BTST call.
Okay, very illiquid stock. We don't talk about it. Went. If we can just pull out the intraday chart, WENDT. I mean, we're talking about some of the multinational shares. Some time back, it was GSK. So there's a big move happening on that stock right now. 10.5% higher is what you have. They've also come out with numbers and 4.5 crore profit versus 1.09 crore. So of course on a low base, but looks good. Income also 37 crore versus 31 crore. So that's the reason. And of course there's limited float, low volume. So that's perhaps the reason that you're seeing this move. Anand Tandon is still with us. Anand, this MNC Pharma, we saw GSK's numbers. Anything that you're buying here that always has had, of course, a bit of a premium, but any thoughts here?
Well, the MNC Pharma is in favor right now because the overseas market is not doing well and the domestic market is doing a little better. But frankly, I try and avoid MNCs because I don't think that you are aligned with the investor interest there. The promoters and you don't have the interest in the same direction. So if you have to play the domestic market, I would prefer to buy the domestic companies, and there, obviously companies like Torrent and Alkem can do quite well, barring any accidents. But to my mind, the upside still remains the export market. If it is not the US, it can be other markets, and that is where the bigger money will be made whenever it turns. For the time being, of course, you can continue to remain in the domestic play, and as I said, I would prefer the domestic owners.
Okay, fair enough. Ashwini, just a question, for the next couple of days of trade, what are you better off getting into now? I mean, should you stick to original leaders who've taken a break? I'm talking about Reliance and HUL. Or should you go with the momentum that metals are showcasing? Hindalco, Vedanta, second day running. Good move on these stocks. What's a better bet?
See, there's obviously money is coming out of those, outperformers, erstwhile outperformers. And for whatever it's worth, it's getting into, stocks which have been bashed up. Metals is going up because it had a bad time over the last 4 months. So that way, the biggest rallies will come in things which have gone down. Because in Kotak, etc., there are hardly any short positions. Unlikely they will recover in a hurry. So as long as this Nifty Junior rally continues, you are much better off getting into metals and all other such stocks.
Okay, let's do one thing. Let's thank Anand on that note. Anand, thanks a lot for joining us. By the way, those are KRBL's numbers. Today the market is in a mood to actually rally. Revenue is down 15%, profit is down about 11%. Stocks up about 5.5%. We'll take a break and more market talk on the other side.
Welcome back, 3:15. Market's holding quite all right as far as the Nifty goes. We are still exactly at 11,130. Hasn't budged an inch in the last couple of minutes of trade at least. So let's do one thing. Let's just turn the spotlight on a lot of the big numbers that are lined up tomorrow. It's a heavy day as far as earnings are concerned. So let's straight away go to our colleagues. We've got Mangalam joining in to tell us whether the pizza will taste as good. But before that, let's find out if the big behemoth, L&T, can deliver on expectations this time. Anisha?
Hi Surbhi. Yes, as far as the expectations go, they are a bit elevated, but do remember that this is not a very important quarter for the company as it is. But in terms of the expectation, we are looking at a revenue growth of around 10%. Given the order book at the start of the year was strong and the execution has been steady, margins are expected to expand and come at around 9.6% level, because remember last year there were quite a bit of one-offs in the numbers. If you remove that, it should come around 9.5 to 10%, and the bottom line is showing a healthy growth of around 30%. And the reason is that losses from subsidiaries etc. is expected to come down. They have transferred the loss-making road assets to an InvIT, as well as the Kattupalli port deal should fructify this quarter, and the impact of 300 crores should directly be seen in the bottom line, and that's why we're looking at that healthy number. Other than that, the key thing to watch out for in L&T's number is the order inflow, and this time you shouldn't be worried about that, because they've already announced order inflow worth around 35,000 crores in the quarter gone by. So the expectation is they'll do anywhere between 40 to 50,000 odd crores. Even in terms of guidance, they seem to be faring well, and since it's the first quarter, the street is not expecting much. But lastly, in terms of the commentary, watch out for what they say about how the execution is picking up. Private capex has come down in their books, so whether there's any pickup in that, as well as any update coming on the non-core sale assets, is something we'll watch out for.
Okay, thanks a lot for that, Anisha. Over to you, Mangalam. Jubilant Food down today. Of course, it's been some profit taking, but what are the key expectations?
Well, down today, but for all practical purposes, Anuj, it is at a record high ahead of its numbers. The stock is not very cheap, trades at 48 times 2-year forward earnings, and that is after baking in doubling of the EPS by FY20. The street expects a good quarter as far as Jubilant Foodworks is concerned, not just on the top line, more so on the operational front and the net profit. Top line growth of 20% is what the street is working with, 815 crores. EBITDA should go higher by about 67%. The number that the street is watching out for is closer to that 130 crore mark. That implies an over 500 basis points jump in their EBITDA margins. The net profit on the back of that should be higher by about 170%. The most important number as far as Jubilant Foodworks is concerned comes 15 minutes after the results are reported to the exchanges. That is the same store sales growth number. This time we're working with a number of close to around 18 to 20%. The range is pretty broad, anywhere between 15 to 21%, but suffice to say 18 to 20% is what the street is working with. Why is that? Well, because one is the favorable base. The base quarter had a 6.5% same-store sales growth. This is after we saw some improvement the first quarter of Pratik Pota's leadership. Secondly, the product mix change in their everyday value pizzas should aid their margins going forward. Third thing, extension of delivery hours in Maharashtra up to 3 a.m. and that works well because FIFA was, the first month of FIFA was in the last part of this quarter. Along with that, we had IPL as well. During sporting events, we see pizza ordering increasing. So that is something that will aid Domino's.
Okay, Mangalam, thanks a lot for that. Some statement from, actually it's an ASSOCHAM statement quoting the Commerce Ministry talking about the centre coming out with amendments to the SEZ rules to realign with the GST laws. So that's interesting. By the end of this month, it quotes one Commerce Minister official, Mr. Swain. So that's a bit of a move that you have on that one. We don't have too many listed, of course, SEZ stocks, except perhaps Adani Port and SEZ and a couple of others, but that is a bit of a news that you have at this point in time. Let's just see the intraday chart on Adani Ports. That is the one which is up to 2.5%, but that's a bit of a piece of news that we have.
Okay, so Adani stocks anyway on the move and quite a bit so. Mitesh, just to take up, L&T actually with you is a bit of a move on the stock that's building up, 1326. It's getting into an event tomorrow. How would you approach it?
I think, we have numbers tomorrow, I think, for L&T, but the The current chart pattern looks quite positive. In fact, it's managed to get past these levels of around 13.5, 13.10. And as long as that is not being broken, I think that the stock should continue to enjoy upside momentum with targets in range of around 1370 to begin with, and an outside chance of hitting 1400 also very soon. So I think I would be quite positive over here. And maybe even if it's a pre-result event, if you don't want to buy into the future side, you can try to buy into a call option with July expiry, so that the premiums are very limited. And in case something positive comes out, then the stock should head very fast towards 1370 also.
Okay, all right, that's L&T. It's had a good run last two sessions, approaching numbers quite strongly. We'll take a break on that note, but when we come back, we will have the market closing. Let's see if we can get a solid close. Right now, it looks likely 50 points higher on the Nifty. Welcome back. Well, we've got a 0.5% rally going on the Nifty and on the Sensex today, just a little under 0.5% on the Sensex. Sudeep Bandyopadhyay is joining in. Sudeep, first your thoughts on this big move that we're seeing across the board in cement. Would it be correct to extrapolate ACC's performance? Would you buy any cement stocks now?
Absolutely, Survi. I think ACC's performance was fantastic. Volume increase and all that is fine, but the way they have maintained the cost, and if you take off the one-off items, it's actually their costs have come down, and I think that's fantastic under the circumstances. The way the raw material, particularly the energy costs, have gone up, petcoke prices have moved up, it was kind of unexpected. So ACC performance has definitely enthused the market. Also, I would say that the demand scenario in central India is pretty decent, and the current correction which had happened in the cement company prices, particularly some of the tier 2 or mid-cap, small-cap cement companies, that definitely gives us excellent opportunity. But one has to remember that this is the monsoon season, so nothing great should be expected in Q2. But if you are a slightly long-term investor, I definitely think it is worthwhile buying ACC at current rates. You can also buy JK Lakshmi Cement. Remember, the white cement and normal cement mix gives us an excellent position in the market. Also, the market price is reasonable. The other stock I'll definitely talk about is Heidelberg Cement. It hasn't moved up quite a bit, but this has got all the potentials of going up significantly as soon as the monsoon season gets over.
Sure. Well, today we heard it from two money managers. One, of course, a market veteran. We had Sunil Singhania himself talk about the prospects of higher pricing power. You heard the same kind of commentary from Kotak Mutual Fund as well just a while back. Anuj, right now the gains seem to be intact on most of these cement stocks. So, I mean, could this be the starting of a bigger move? I don't know.
I won't know about that. I wanted to make a technical point here, Surabhi. Okay. None of ACC, Ambuja, I think even Ultratech, I think is now part of the Sensex. I think that is really interesting bit. And even in the Nifty, it's only Ultratech which is now part of the Nifty. The point here is that the index should reflect. I mean, you should have India's largest cement companies as part of index. Whether they go to 52-week lows, all-time lows. In 2017 we saw so many financials being added. Of course, so the financials weight, went up. There's not a single cement stock in the Sensex, which is bizarre. So, and of course, stocks make a comeback.
Absolutely.
Sectors make a comeback.
Yeah.
The index should reflect your economy. If the economy is bad, in that case, it should reflect that. If the economy is good, it should reflect that. A DLF should always have been part of the Sensex. If the or the Nifty. If your real estate is bad, let it be. Otherwise, you can't call it the stock of the nation. The stock of the nation should represent the economy of the nation. That's the limited point. And it will happen sometimes. When you completely forget these stocks, thrown out of the indices, nobody talks about them. Today in the morning, for example, I don't think anyone thought that ACC could have this kind of impact. Straight away, stock opened 10% higher and sustained there. 13% higher is what we have right now.
I totally take your point, Anuj. And there's the saying that goes in Hindi: "Ugte suraj ko sab salam karte." So I mean, I don't know, when sectors come back, companies and flavors come back, then there is a way of stocks coming back into the headline indices as well. Anyway, let's see when and as and when that happens, perhaps for cement. But Sudeep, just about 2 minutes to go before the market closes out. The other big story so far this week has been this massive war, or a war of sorts, I think, in the two-wheeler space. At least the stocks are very, very nervous. What would you recommend on Hero and Bajaj?
Well, I think I'm a buyer in Bajaj. Look, what has happened is they have very clearly articulated a strategy that they're going to go for market share. They're going to work on the discounts and multiple other things. Market has become nervous on that news, and the stock has come down. But having looked at what Bajaj delivered over the last few months in terms of numbers, and having seen how their export market, particularly Nigeria, where they are reasonably strong, they have a huge amount of at stake at Nigeria, how that has performed over the last couple of months, I think I'm bullish on this stock, and I think this strategy to gain incremental market share in India, around a few main brands, I think is an excellent strategy going forward in the long run. And with the price correction, I am a buyer. We are looking at 3,000 plus price in Bajaj. As far as the other stocks are concerned, again, Hero looks good. Let us wait for the results. Let's see how it comes out, and then we can probably comment. TVS, I'm not a buyer. Eicher Motors, again, I think it's a good buy. It's been beaten down, and I think it's a great stock for a long-term investor's portfolio.
Okay, fair enough. Well, just about 1.5 minutes left for markets to close. Ashwini, what's your verdict for that day? You reckon this junior rally has more legs now?
See, junior rally is happening because things got bashed up, overdone, because of technical reasons, etc. So junior rally you can see another 700-point day, but Nifty, Bank Nifty are kind of petering out. Bank Nifty again not closing at the highs, Nifty not doing that. So it may be difficult to get to new highs given the way it's going, because if there is choppiness on the second day of a rally, then life becomes difficult. I think we should leave this at a mid-cap rally. I don't think Nifty is showing great amounts of momentum to move higher. 2 or 3 days you hang around here, and once mid-cap is over, I would think there's a good chance we get back below 11,050.
Fair enough. Just about 20 seconds left for markets to close. Sometimes all-time highs are taken out by gaps. Yeah. So let's see if, tomorrow morning, first take, all you need is 0.4%, right? Yeah. 0.4%, less than that, 0.3%. Yeah. So perhaps tomorrow morning is the day, even if you hit there and then come back from there. But in terms of stocks today, the big movers, Grasim was up 8%. That move, of course, happened because, the cement stocks moved, ACC, Ambuja, Ultratech. Grasim also has a large part of cement business, so that's why that was up 8%. Larsen & Toubro ahead of numbers was up about 4%, so big move on that stock. Hindalco was up about close to 6%. Indiabulls Housing was up 5%. Tata Steel, HPCL, GAIL, Vedanta, these were a few stocks where we saw some big gains. On the way down, what was interesting was that some of the leaders of this market have corrected. Kotak, Bajaj Finance, Hindustan Unilever and Reliance. These are 4 names that come to mind where you've seen declines. Kotak was the reason that the Bank Nifty didn't perform. It's got 14% weight now in the Bank Nifty, so that's why you saw that underperformance for the Nifty Bank. But really, today and yesterday have been the day when the retailers should have felt good about their stocks, because mid-caps have done well. Today, advanced decline was really strong.
Oh, absolutely. And, I want to start with stocks that have made a huge move in the dying moments of trade. Bajaj Electric and Crompton Consumer. There is some talk that maybe there could be some kind of protectionist duty measures that India might take to prevent any sort of dumping or any kind of, extreme imports coming in from some of the Southeast Asian countries. So if you see the intradays later, you'll realize the kind of move. Bajaj Electric is suddenly up 9%, 10% as the market was closing out today. Anyway, beyond that point, let's also talk about the other big movers and shakers today. Today was a day of, good numbers getting really rewarded, and even average numbers managing to get past the market's quality gates. So GSK Pharma 14% on the higher side, L&T Tech about 11%, L&T Infotech about 5%. Balaji Amines, again, strong numbers, good commentary from the management, 10% on the higher side. Cement, we've been discussing ad nauseum, was the theme and the sector of the day. So ACC fired up the entire space, pull up something like an India Cement or a JK Lakshmi Cement. Across the board, large cap, mid cap, cement stocks were doing extremely well in trade today. Then I'll move on to something like a Century Ply. Again, Century Ply, pretty strong numbers coming through, 5% up on that stock. Good numbers, solid numbers from Radico Khaitan, particularly some of the operating parameters that we've seen, margin expansion, straightaway circuit on that stock, 5%. USL, now that we're talking about the market being in a charitable mood, USL is probably case in point because here the numbers missed the street estimates. They weren't as good as what people had in mind, yet the stock gets away with a 0.5% increase. Ditto story for Kajaria. Kajaria numbers nothing to write home about for the first quarter, yet the market is choosing to be a little benevolent. 3% up on Kajaria. That was the kind of reaction you got. Delta Corp, 3.5% on the higher side. Tejas Networks, 5%. V-Mart Retail, 3% up. Fertilizer stocks saw a bit of a move because there are reports that the nutrient-based subsidy scheme could be extended all the way to 2020. So you saw that on a GNFC, RCF, some of the complex fertilizer manufacturers pull up a Coromandel as well. So these were the stocks that were up between 4 and 5%. Ashok Leyland has seen some buying, 3.5% up on that big stock today. Voltas has seen some buying as well, so lots of names. Some of the rail stocks are very excited. There's some talk about a tender. Titagarh Wagons about 20% up. Tex Rail was up 20%. Circuit. Some of the sugar names like Dwarikesh, Renuka were on the move. So plenty of names on the upside. Philips Carbon about 10% higher. VIP, I'm not even done with my list. PFC 9-10%. It's just such a long. NIIT Tech about 8%. If I carry on, Anuj, I think I'll take more than 10 minutes to finish this up. Yeah. Short point being that it was a very, very good day for a lot of the mid caps. Just some of the sort of ones where there was a bit of a negative tinge. So Granules is down about 3%. We've seen some cool off on Hexaware. We'll get the fine print on the numbers when we come back to trade tomorrow. That stock was also down about 2%. In Jubilant FoodWorks, approaching the numbers tomorrow with some caution at very heady levels. Today it was down about 10 rupees.
I think NIIT Tech is interesting, 7.5% higher on that stock. But you know, for me, the issue here is the 2-day rally that you've seen in Nifty Junior. Is it start of something big? Is it start of something fresh on the junior index, or is this just one of those cases where because you know it's just beaten down to pulp? That's why you've seen. But you know, this is a big move happening right now. 2.5% today on top of 1.5%. I think, or almost 2%. In fact, if you see this week, this week has belonged to the Nifty Junior, which normally is a sign of a sort of a healthy move. You know, you don't want the small caps to be surging. This is perhaps good quality stocks. But is this a move which is going to flatter to deceive? I think we'll find out. But you know, if you tomorrow hit new all-time high, this will look much better than say last week if you would have an all-time high when you know advanced decline was 1:4. Continuously stocks were hitting 52-week lows. This one looks far better rally than last few days.
Absolutely, it is a better screen. On that note, let's take final thoughts from our guests. Sudeep, so would you venture out recommending any mid-cap stocks at the moment? Maybe any 1 or 2 ideas that you're convinced of?
Well, I think, you know, one stock which has been beaten down significantly is Ashok Leyland. It got a lot of traction when things were going good. Then this entire you know, higher load thing came in and the company has been beaten down mercilessly. I think, you know, it's a temporary disturbance. The demand will come back. And also remember the vehicle scrapping policy is somewhere going to be announced. One doesn't know whether it's going to be happening in a couple of months or maybe it'll take 6 months. But it's going to happen, and that will give a significant boost to you know these vehicle manufacturers, particularly Ashok Leyland. So I think at current price it looks very attractive. I think for an investor it's a good buy. Also, I'll just highlight the entire complex fertilizer space. This continuation of the subsidy is a very good news for this space, and a company like Coromandel Fertilizer should be looked at current valuation.
Okay, all right, gentlemen, then we'll wrap it up on that note. Ashwini, Mitesh, as well as Sudeep, thanks very much for being with us on the show today. We need to take a break, but when we come back next, as part of our ongoing series on India's water crisis, we get you a ground report on Mumbai's Mithi River. We'll be back in a moment with that interesting one. Welcome back. As part of our series on India's water crisis today, we put the spotlight on India's financial capital, Mumbai. On the face of it, Mumbai has no water scarcity, with excess rainfall seeming to be its bigger challenge. But the city's track record of handling its water bodies has been dismal. A case in point is its most abused river, the Mithi River. CNBC TV 18's Ashwini Pirolkar gets you this ground report.
Black water, floating garbage and strong stench emanating from the river. These were a few things that we saw at the origin of Mumbai's most important river, Mithi. This river is also known as Mumbai's stormwater drain, which means it can manage the excess water received during rains. But ironically, this river has become the major cause of floods occurring in Mumbai city. This despite BMC claiming to have spent more than 2,000 crore rupees over the course of 13 years for the Mithi River Rejuvenation Project.
The provision is made. This thing, they have given in first step, the 923 crores were given. And then after that, second step was there. Then 1,239.60 crores were given. And then in such a way, we also completed the third step in which 640 crores were given.
At every stretch, what we saw was floating garbage, encroachment by slums on its bank, and construction debris lying around. Industrial effluents are also led out into the river, because of which it has started foaming up near the industrial belt of Andheri East. In its defense, the BMC claims the work on Mithi River is an ongoing process.
Entire desilting is not possible. If the heavy showers of rain comes down, then again the flooding is there. Then whatever work we have done, it goes to dogs.
There is absolutely no doubt that Mithi River plays a vital role in keeping the city safe from floods during monsoon. It also ensures that the city's groundwater levels do not dip. And now is the high time that the government, BMC and the Mumbai residents get serious about the rejuvenation of this polluted and neglected river before it is too late. In Mumbai, Ashwini Pirolkar.
Okay, we're getting numbers from Hexa, where a profit number of 153 versus our poll. We need to see what the dollar revenue growth would be like, because the estimates that we're going with are about 4% growth on the dollar revenue front. And the constant currency growth should be around 4.5 to about 5%. Okay, so we have the EBIT number at 159. Now that doesn't look very good, because the poll was about 172. And the margin has come in at 14%. That is also slightly lower. We were expecting a margin expansion, 100 basis points margin expansion. That's not what's happened with Hexaware. The profit number at 153 is also slightly shy. So this doesn't seem to light up the screen just yet. Let's just wait for the constant currency numbers to also come in as well. The margin number obviously is a little short of expectations. It's been slightly patchy, the track record, in terms of just, outperforming on the dollar revenue front, because that has been coming down gradually over the last couple of quarters. That's the rupee revenue number, 1136. And that more or less is okay. But it's the dollar revenue and the constant currency growth that we need to map. So we'll try and get you some more details on the Hexaware numbers. In the meantime, let's address one more story and shift focus to an exclusive. Government sources are telling CNBC TV 18 that the Directorate General for Anti-Profiteering is investigating complaints against Patanjali. Timsi Jaipuria is joining in with all the details. Timsi, what's happening here?
As government tightens the noose around enforcement, trying to ensure that the rate cut benefits are passed to the consumer, the DG Anti-Profiteering is investigating complaints against Patanjali. Government officials indicate that Patanjali is alleged for profiteering on toothpaste, shampoo, shaving creams, cosmetics, etc. in the complaint. For the benefit of our viewers, let me remind that the complaint against Patanjali is for not passing on the benefit of rate cuts, which were announced by the GST Council in November 2017. Patanjali did not respond to an email query sent by CNBC TV 18. Officials also say that the maximum number of complaints received by the National Anti-Profiteering Authority pertains to FMCG players, followed by complaints against real estate developers and pharma companies. Remember, currently the National Anti-Profiteering Authority is investigating 8 complaints, whereas the DG Anti-Profiteering is investigating 27 complaints. 31 complaints are at the level of Standing Committee and 57 complaints are at various state-level screening committees. We'll keep you posted as soon as we get more updates. Back to you.
All right, on that note, we need to take a very quick break. We have all the currency and commodity market action coming up on the other side with Manisha Gupta. Welcome back. Let's chat commodities now, and much of that really is trading in the positive. That's not how we started Asia, but definitely in Europe we have seen buying come back for industrial metals and for crude oil as well. Azleen Ahmed, editor Argus Media, now joins us to talk more about that. Azleen, hi, good to have you. What really is happening in the crude oil space? Because on one side, we are looking at oversupply concerns in the market. And on the other side, there are, the demand growth concerns as well after what we've heard from IMF and G20 as well.
Yeah, I think that I wouldn't really say there's an oversupply, but I think that the earlier concerns that we were in a very tight supply market, really because of the Libya output problems and also the concerns about Iran. I mean, it seems to have eased a bit because production at Libya is now back up to about 700,000 barrels per day. So that's a big increase from what they had to face about a month ago. So I think that the market is just seeing that at this point, we're not seeing a shortage of supply. And I think that's why we've seen both ICE Brent and WTI prices fall quite a bit in the last couple of days. I mean, on the demand side, I think the expectation is that if oil prices stay very strong, then it could erode demand. But at the moment, the demand is still very strong so far for this year. And the demand growth is coming a lot from the US. So, I think that it's just, the market is just, has been a very volatile market. And right now, it's just that all the concerns earlier of supply have eased.
So what is your sense, taking in all the factors that we're working with right now, what's your sense on where are the prices headed? Have we taken all of those concerns into the prices now? Are we closer to the bottom? How are you treating prices?
I think that it's going to be a little bit hard for oil prices to fall very significantly lower because already, I mean, I think that most of the bearish factors seem to have already been factored into the current prices. I mean, we're seeing Brent close to about $73, and I think WTI is about below 70 already. So, it's going to be, I don't think we're going to see big falls in the prices because going forward, it just looks more likely that there'll be more bullish factors than bearish because we still haven't seen the full impact of the U.S. sanctions on Iran in terms of the Iranian export. I mean, some refiners like South Korea and some in Europe have already started to reduce the Iran export, but still, it's going to be a couple of months before we see the actual impact. Venezuelan production is expected to still continue to fall over the next 6 months. So I think those are the things that the market is still keeping an eye on. And hopefully the Libya situation doesn't worsen and that they can continue to export the volumes that they've been exporting over the last week or so.
Point taken, Azleen. We'll let you go at that. Thank you so much for joining us. So that's the view coming in from Argus Media, that the crude oil prices are unlikely to fall much more from here, and we might actually see some support coming in from here on. But the important news of the day clearly has been from the agriculture and the farming sector. The Madhya Pradesh government has announced price deficit scheme for the Kharif crops. To discuss this, we have with us Anil Gupta, professor at the Center of Management in Agriculture at IIM Ahmedabad. Professor Gupta, hi, thank you so much for joining us. First of all, MP did take in on this scheme in the previous year and then abandoned it. And we have seen the state government pick that yet again. would you say that there is really no solution, and that is the reason the government really has gone back to the tried and tested formula?
Well, there is no doubt that the price that government has announced, which are very welcome, can only be actualized if there is a procurement. Now, the formula for the procurement is that central government is bearing the large part, but the state government has to bear at least 40%. And the problem is that most state governments don't have that kind of fund. So unless they squeeze some other programs, they would have difficulty. But even bigger challenge is, if they procure these crops, millets, pulses, where would they store them? So my suggestion would be that if Madhya Pradesh government ask all the public and private sector organizations in Madhya Pradesh to give advance interest-free loan to their employees to buy their annual requirement of millets, pulses and oilseeds, that would solve two problems at one time. One, there will be a private investment coming in for procurement. So government doesn't have to put money, government has to only ensure the logistics. And secondly, the storing problem, the storage losses which are legendary in our country, both because of leakages, but also because of the damage that is caused because of humidity in the air and all the storage. So that's all of the question. You are taking two problems with one instrument, which is distributed storage. Procurement through private investment, government, various companies, various government departments will collect money from the office, and office will deduct from the salary and then collect from the employees with their authorization per month or whatever amount has to be collected.
Right.
So you are really mobilizing private investment, private savings into procurement, which has never happened before, but which is so easily possible. Otherwise, what is going to happen is that barring some quantity that they may buy, and then afterward various reasons will be found. Sometimes the quality will be claimed to be not good. Sometimes they will not have enough storage. So this problem really will get more complicated as the election time comes closer.
So, while of course MP has taken a lead, we still are yet to hear from the other states on how they are going to implement the MSP. What are the shortfalls really that you see on this? You have said that the funds is going to be an issue, so is going to be the storage, a saying of all of this as well. But all the 13 crops, do you think any state for that matter, and I do understand your point about the private sector being invited in, but that still seems some time away because we just have a couple of months on harvest. What is the best way forward, at least for this Kharif?
No, I would think that if every consumer association in every government office or private sector office puts up on a portal their bid for how much quantity they want for mustard, how much quantity they want for pigeon pea, how much quantity they want for other millets, and that is aggregated. And that is where you need the help of the private sector aggregators, that they will then buy on behalf of these consumers, and consumers will give advance, and advance will be, they'll give advance because they would have got advance from their office against their salary. So it is a completely risk-free option in the sense that nobody's money will get lost because consumers is going to get supply, and only then the amount will be credited. But this is a logistical challenge, and I'm sure if there is a cooperation and there is a willingness to help farmers of the country, which I think every consumer must think like that, then it is possible. Otherwise,
but Professor Gupta, the way we stand right now on what MP really has announced, going by that formula, if the state is going to look at that, because those registrations start from this Saturday until 31st of August, what is your sense from what we've learned in the previous Kharif season? How far can the government really go with this?
Well, if you look at the MSP and the market prices, you will get the answers. Because what happens is that the time of the harvest prices will be low, and that is when you need to really buy. But when you buy at those prices which are lower than the MSP, then you obviously will have to provide that compensation to the buyer, whosoever, whether it's a public buyer, private buyer, state corporation. Somebody will have to be authorized to do that, isn't it, from intervention agency. And that intervention agency must have the ability to deliver this kind of promise or assurance that the state is providing. So how efficient that this agency is will make a difference. You must also realize that unlike summer when wheat is procured and rice is procured, you have school buildings which are available for storage.
Right.
At this time, there will not be public buildings available for storage. So in a rainy season, almost rainy season because the rain will be toward the fag end. Some rains can come in the month of up to September, late September also, and October. So it is not unthinkable that there could be rains. And then where would they stock? So my only feeling is that unless they organize distributed storage with the help of buyers, consumers, it will be difficult. Please also remember that not all crops have storability at the given level of moisture. You need to dry these crops. If sunlight is not available, then the crop already will have enough moisture.
So what you really
that is not a.
So what you really are saying
when the moisture is high.
Yeah. So what you really are saying, Professor Gupta, is while of course this it is a step, first one that the MP government has taken. There are just so many challenges.
Very much appreciated.
Yeah,
yes.
But so many challenges that the government will have to see, and we'll really want to see on what the other state governments as well do.
Yes,
completely out of time, Professor Gupta. We'll have to let you go. We'll of course connect base with you yet again when we hear more about this. So that really is the view really on the MP declaring Bhavantar Yojana scheme at this point in time. With that, it's a wrap up on this edition of Closing Bell. Thank you for watching.